Well, anyway, yeah. What's up? Hey, we're
There we
live.
go.
How's it going, everybody? Happy to be joined by good old Ryne Williams and I don't know, I can't say Lord Vader, Lord Dividend. It sounds weird, but Darth
Dividend.
Dividend, the dark
Sounds
side, dude. I'm a big Star Wars fan. Anyway, so we're all here. We finally got this thing figured out, and we're doing the live stream together. And we're gonna tell you our favorite sweep, sleep well at night stock. So, which one of you guys want? What do you want? Rock paper scissors. See who goes first.
Darth, why don't you kick it off, man?
I'm probably going to go with Realty Income. I mean, they have done so well. They're known as a monthly dividend stock. They've been pretty strong during the pandemic and the recession, and they've hiked their dividend all those years. So I'm a REIT guy, so I am getting a little bit more conservative with my stocks, but I'm going to go with Realty Income right now.
Nice, man. Nice. Yeah. Dividend aristocrat. They are.
Just made it. Yeah.
They just raised the dividend like last month or 2 months ago, right? I
Yeah.
think there was a nice like 4% raise or something like that.
Well,
Yeah.
they're always raising the dividend. I think it's 117 consecutive dividend raises since they went public and an
Right.
IPO since they went public in '94. And so, you is that a big position for you, Darth?
I
Is
have
the big
100
O?
plus shares. Yeah, I mean, I have 100 plus shares in those guys, and I plan on getting 200 eventually, and then just letting it fly.
So, are you dripping? Are you dripping?
Oh, of course, yeah. There's no way that I would just let it sit like that. Being like 37 and stuff, and just reinvest the dividends. I mean, that's all. This is the perfect time to reinvest the dividends too, because the price per share is down with the market taking a hit. I mean, this is nice. I mean, look at what you have with Pepsi with 100 shares. I mean, you
Yeah,
might be able to buy more shares and stuff with it now.
yeah. I don't. I'm weird like that. I don't drip though. I just like to collect the dividends. I always say I collect the dividends and then I cut it with new cash and target deploy it. But you don't do you drip, Ryan? You drip, right?
No, I recently turned it off maybe a couple months ago to do the same thing, just manually reallocate those funds. And it's been bittersweet. I was just thinking about it as Darth was describing how he drips. It's like, man, with ones like Realty Income where they're down so much in the last month, I don't know how down they are, but I know they've come down quite a bit. It would be nice to get that dividend reinvested back into it, but then I mean, Russ, like you said too, man, it's nice to be able to pick and choose where you want to put those dividends.
That's true. Absolutely.
Yeah, but I mean, it's kind of a good thing when you drip, though. I mean, it will force people that don't pay attention. You're going to buy less when the stock price is high, and you're going to buy more when the stock price is low. So, I mean, it's, obviously there's a good and a bad for everything. But
Right.
yeah, I mean, no problem with dripping at all whatsoever. It's just not my style, baby. It's not my flavor. And okay, cool. So, Realty Income, you own Realty Income, right, Ryan?
Yeah, for a while it was actually like the biggest position in my portfolio, totally by accident too. When I first started dividend investing, like getting serious about doing this, I just, you guys, I don't know, maybe you were in the same boat. I watched a ton of YouTube, and it seemed like everyone had Realty Income. So when I first started, I just loaded the boat. I don't have as much as Darth does. I think I have maybe 35 to 40 shares somewhere in there. I haven't bought any for a while, but for a long time it was my biggest position. Now it's maybe third or fourth. But yeah, just because I bought so heavy early on.
Yeah, I actually just got back in it on Thursday, Realty Income. So I was like you, Darth, I had 100 shares and I was selling options on it, covered calls, and one of them got called away. And I thought it was a little bit high for the share price. So I ended up putting a little bit more money I had in the account and bought some Starbucks when that was like, I think 81, I think it was. And I think I got called away at Realty Income at 72.50. So I was like, you know what? I'll just go with Starbucks. And I was in that for a minute. But yeah, actually, I had a lingering swing trade from June of 2021, a biopharma company called Immunovant, IMVT. And for no reason, no news, no anything, this company just went from $4 all the way to $10 in,
Wow.
I think, 6 days, 6 or 7 days. And my cost basis was $10.72. So, I mean, at one point I was down, I don't know, like 70%. So, I had written it off, thought it was a mistake, and I got out with a 10% or like 9.33% loss, and just rolled that money right into Realty Income. Just happy, it'll take 2.2 years for me to get that $139 down. I'm down in Realty Income dividends just from those shares I bought. So yeah, very cool, man. I like it. Oh, do you hold that in a tax advantage account, or is that in a taxable?
Yeah, it's in a brokerage account. So, I have to report that as income. So that's the con, with the real estate investment trust. So
Yeah, but hey, better to pay taxes on a gain than nothing on a loss, right?
yeah.
All right. Well, I have a sneaking suspicion that Ryan and I have the exact same one, which is cool. So
Should I go?
yeah, just go for it, man. Just rip the Band-Aid off.
I don't
J&J
think this.
Band-Aid.
I don't think this will come as much as a surprise, really, to anyone. So my sleep well at night stock is Procter and Gamble, ticker symbol PG. Was
There
that
you
what
go.
you were going to guess, Russ?
Yep, exactly.
And
I
it's
kinda
not
guessed that.
obviously. It's what's that, Darth?
I kind of guessed that. I'm like, it's got to be one of those. It's that, or I was going to say, like Clorox or something.
Yeah, something like that, right? I mean, like I said, I said this before we went live. It's like the most obvious choice, but in my mind, it's like it's one of the most, just in terms of the products that they sell. It's like, it doesn't get any more stable, more reliable than Procter and Gamble. Dish soap, toothpaste, shampoo, deodorant. I mean, you name it, and it's all the laundry detergent, and it's all like the top brands. So it's like, what's not to love? And the dividend yield's not the best. The growth's not the best. It's somewhere between 5.5% and 6% for the last 5 years. But, solid dividend growth history, 65 years of consecutive growth. So we're looking good there. And, seeing slow but steady growth in the financials as well as time goes on. So it's like, to me, it doesn't get any more secure than that bad boy right there.
Yeah, you
There
can't
you
go
go.
wrong with that. I mean,
Eight-
it's go ahead.
8% 20-year CAGR. I'm showing it on screen right now for
Dang.
Procter and Gamble.
What's
and
it
look
say
at that.
the last 5 years is 5%. Okay.
Yeah, 5% and 132 years of dividend. Here, let me just do the whole screen here. Make it big for everybody. Get our mugs off there. There we go. 132 years of uninterrupted dividends. I mean, if that's not solid, I don't know what is. 66
Right.
years of growth, and yeah, they're gonna go ex-dividend here. They should be at the end of October
Yeah.
for Procter and Gamble. Yeah, man. So I don't know. Maybe I should just build off of that. I have a few notes on
Was
old
that yours
PG.
too? Was that your pick too?
Yeah, that's my pick too. So
I
here
honestly,
we go.
sorry, real quick. I thought
Yeah.
for sure you were going to pick Pepsi. I thought Pepsi was going to be your number one.
Well, what worries me a little bit is their free cash flow payout ratio. It's, I think, at like 96%. It's way up there right now because of a lot of the same things that a lot of the companies are experiencing. So it should come down, but it's because of that it's just not as sleep well as Procter and Gamble is, which returned $100 billion to shareholders over the last 10 years. And as we just showed, they've been paying that dividend for 132 years, and they're dividend king. They've been growing it for 66 years. But one thing I found was really interesting about Procter and Gamble, and this is when I was researching them when I started doing this, was, dude, in 2014, they sold off over 100 brands. They started streamlining the company to focus on core positions. So their 65 core positions make up 95% of profits, which is nuts. And check out, so they sold Duracell. These are some of the brands. Remember, it was over 100, but what kind of company can be stronger by selling Duracell, Right Guard, Rembrandt, liquid paper, amongst some of the notable names? It's crazy. And I think Berkshire, I think they had bought Duracell, but I believe it's its own company now. So I don't remember how that all played out, but yeah, just for those listening, this might get a little, you're going to laugh here, but these are some of the more notable brands that P&G currently has. So they got Head and Shoulders, Olay, Old Spice, Secret, Braun, Gillette, Venus, Downy, Gain, Tide, Metamucil. I'm not there yet, but hey, I'm going to be investing in that someday. Crest, Pepto-Bismol, Vicks, Mr. Clean, Febreze, Swiffer, Loves, Pampers, Always, Tampax, Bounty, Charmin, and Puffs. Those are some of their bigger brands that Procter & Gamble has. And yeah, just one of the things, though, that does worry me that we're going to have to keep an eye on is what we said is affecting most of the companies is the labor shortages, the supply chain issues. That's all increasing their cost. In 2022, their fiscal year, they experienced a $3.2 billion cost from those things, plus the goods going up, gas, interest rate hikes. And that's going to come down a little bit to 2.4 billion in fiscal year 2023, they project. And the last thing is really that we got to pay attention to. 51% of their net sales are from international, so they sell more internationally and abroad than they do right here in the United States. But again, just super solid company. They have not terrible debt. It's just, man, what are you gonna say? And they're, for me, super solid company. And
the products too.
Yeah, I I've joked before. I tell people, like, I was like, hey, pause the video. Well, not this one, but pause the video, run up to your bathroom and see if you have at least 3 Procter and Gamble products, somewhere in your bathroom within an arm's reach. And yeah, it's crazy, but yeah, they have to raise prices like everyone else. And the only downside could be that shifting, if consumers shift down to the lower price alternatives. But we'll have to see how that goes. I know their CEO, John Mueller, he's been with the company for 33 years, so that's definitely solid. But hey, I want to give a shout out real quick. This is my guy, Jason, right here. He's got a YouTube channel, by the way, Freedom Stacker. He does coins. Are either of you guys into like silver or any kinds of coins or bullion, precious metals?
Darth, don't you do a little bit of that? Haven't we talked about that before?
What, crypto?
No, like
don't
physical,
have,
like gold, silver, platinum, palladium.
Don't you have gold? Oh, I thought
No,
you had
no,
some
I'm
gold
not
for some
that
reason.
new.
Yeah, I had I used to be heavy into gold and silver, and I'm gonna say his name. Coming out of the last recession, I don't know if you guys are familiar with Dr. Doom, Peter. Oh my goodness, I forgot his name. Peter Schiff, Dr. Doom, they call him. Yeah. So I was listening to him, and he scared the bejesus out of me. That he said this was just a small taste of what's going to come, and the market is going to tank and tank hard. You're going to be wiped out. You got to go to gold and silver. So I actually sold some of my 401k to buy gold and silver, and yeah,
cool.
it wasn't a ton, but it was enough that now I look back, I'm like, what was I thinking? But you didn't know. You don't know what you don't know until you do know. So
I think
anyway,
it's cool, man. Like, I like the idea. I don't have any of that stuff, but I like the idea of, slowly over time building a collection of gold or silver, whether it's coins or bullion or whatever. I just think it's a really cool thing to have, but I'm not going to go pouring a ton of money into that stuff, obviously, but I like the idea of building something like that out slowly but surely over time. It seems like a fun little collectible.
Yeah, so I kept some of the gold bullion just because it's interesting. The U.S. Gold Eagles, they call them. And everything else I sold on eBay when silver was like sky high not too long ago. So I made, a little bit of money on it. But anyway, so yeah, cool. Let's see. Here, I just saw this one.
Yeah, I was like, really?
Posted in Ryan's live chat. Guy who's a parent respect, never take advice from a guy with tattoos. We're dividend investors here. So yeah, obviously that's kind of my little inside joke that I'm not sure was very inside that a lot of people got. But so what are you guys buying? What have you been buying lately?
Darth, kick it off, man.
McCormick. I started buying McCormick. I started adding Starbucks to my portfolio. I actually got rid of all my YLDs. I sold them and just bought Starbucks because Starbucks is down. Like I was like saying about the box theory, like you're stuck with the YLDs, the QYLD, RYLD, and XYLD. You're only going to get about 17 cents to about 23 cents. It's never going to go up and it's never going to go down. So, I mean, all of us being young, I mean, it's like why do that when I could put money in Realty Income or something, where I'm going to get dividend hikes in the long run. See, I just posted a video on Ally Bank. Or Ally Financial. I just started buying them. Really good dividend growth. IIPR, I'm back with those guys. I
Yeah,
sold them for a
nice.
huge profit, started buying them again. And JP Morgan, I just started buying.
Nice. IIPR was way up there, weren't they? They were over 200, right?
Yeah, I couldn't keep up and I had to
Yeah.
sell them. And then for a profit.
Hindsight. Ugh, hindsight, man. Yeah. I still hold IIPR. I'm down a little bit, but we'll see. We'll see how that plays out. Not a big position, and it's in the retirement account too. So
Nice.
look at this, Jim again. So he's from Nebraska. Warren couldn't make it, so I guess he's in his steed.
Yeah.
All right, what else we got here? Anybody got questions watching? Shoot us a question. What do you want to hear us opine about or talk about? Or
So
I don't
I'll
care.
jump in and say
Yeah.
what I've been buying lately, if that's cool.
Yeah, that's what.
So just this week, I picked up some Altry Group. I also bought some Procter and Gamble, and then I've been buying KRC, Kilroy Realty Corporation, just trying to slowly build out a position in that bad boy, which I could not have timed that worse, guys. I think my position right now is down like 15%, and I just bought it. I just started buying into it maybe like 6 weeks ago at most, and so it's like I should have just held on for a few more weeks and started that position, but I thought it was pretty cheap then. I definitely think it's cheaper now, and so I'm slowly but surely building that out. But as the market continues to decline, it's been a really interesting week, but net down, I'd say, and while that continues to happen, I'm just like trying to take advantage of the opportunity to buy some of these safer stocks like we've been talking about, like the Procter and Gambles or the did you say you've been buying McCormick, Darth? Yeah,
Yeah, I
McCormick,
just started buying
the
them.
Starbuckses, those kind of things. It just seems like a really good opportunity to do that. So trying to do that, but it's like, there's just so much out there right now.
Yeah, I know.
That it's tough to like prioritize. You know what I mean?
Good headache to have, isn't it?
Oh, dude, absolutely.
It's like a
Much better
kid
than
in a
the
candy
alternative.
store.
Yeah, exactly.
Yeah, with the real estate stuff, I mean, I'm not in a big hurry. I just wanted to start that Realty Income position, but I mean, I don't know if you guys pay attention, but yeah, with the rates that are rising and the bond yields, I mean, it's going to be a drag on the real estate stocks because usually when rates rise, they go down because they operate on a lot of debt, and it's going to make acquisitions more expensive for them. And plus the higher bond yields, like a lot of people remember would talk about companies like Realty Income being a bond proxy, which is kind of silly. Like an equity can never be a bond proxy because they're just too risky. I mean, I get what people are saying, but yeah, I mean, there's capital that's being sucked out of the space and going into bonds because it's just safe. And there's a lot of people that don't want to deal with the volatility that the equities bring. But I guess if like our guy, Warren had said, to be greedy when others are fearful and fearful when others are greedy. So, hey, so I'm thinking there's going to be some nice opportunities. Let's see this question here. You guys want to take a stab at that name? Vial?
That's that's Iljal.
Okay.
think.
Question regarding fractional shares, investing €1,000 per month. Should I focus on 2 to 3 stocks or set up a €50 approximate plan for more than 5 to 10 target companies? Thanks. So we'll give you our opinion on this. Obviously, we're not financial advisors. None of this should be taken as a financial advice at all. But yeah, if you want our honest opinions, it's a little tricky. I'll start off because you really have to know like what your goal is. We don't know how old you are and whatnot, but how involved you are. If you're going to pay attention, spend a few hours a week looking at these companies and stuff and following them. If not, I would just index fund it. And I actually will say, because you are in your euros, so I'm assuming you're a European investor, I would highly recommend contacting either on YouTube or on Twitter one of my good friends, the European Dividend Growth Investor. Super solid. He would have a really, really good answer for you, more than we would, since we're based here in the U.S. But you guys have anything to add to that?
I mean, everybody has different dividend investing strategies. So with my M1 Finance dividend portfolio, I have some high yield stocks. So I'm loading up on them so I can start buying that dividend, that income from that to buying stocks like Starbucks. So that income I'm going to have distribute into Starbucks and a lot of the dividend growth stocks. Walgreens, oops, I just said that I'm buying them, which I am tomorrow. But, I'm trying to get a lot of dividend stocks to start buying Altria, start buying, that income, kind of like the way you guys do it with your income allocation. That's what I'm doing with my M1 Finance dividend portfolio. Like the high yield ones, like are some that are similar to Arbor Realty Trust, are starting to buy these quarterly dividend stocks, which is really exciting. Like the dividend growth stocks, like Starbucks and all that. So that's kind of my strategy. What I'm doing with M1 Finance. I know Matt doesn't agree with me. Matt Money's on here right now with my,
Oh, is he? Does
yeah,
he want
he's
to
here.
join us? Make it a foursome.
You can ask him.
Why not?
Yeah, why don't you hop on?
If you want to hop on, Matt. How can I? Oh, email me, Russ at dapperdividends.com. Let me just put it there. Let's see. If he wants to hop on, I don't care. The more the merrier, man. Whatever. Look at this, Shamir. Interesting question for you guys. So, Procter Gamble shareholder meeting on Tuesday. Don't forget to vote. And I think I talked about this yesterday. I've never voted. Have you guys ever voted your shares for anything?
Mm-mm.
Yeah, I don't know why. I just never feel compelled to. I almost feel like it's not going to really make a difference. And
I just don't ever know what we're voting on.
I know.
Yeah.
Like vote for this person. The board of directors is like never heard of him.
Yeah.
There's somebody asked Darth if he's. Oh, what's up, you? Is anyone going to buy Broadcom or wait to dip more? Yeah, I don't know, man. For me, that space, the whole semiconductor space, is getting smoked pretty hard. I mean, I think AMD fell 10% this week. They're basically saying the same thing Intel was, that the PC market is slowing to a crawl. You have like Ethereum, the crypto that went to a proof of stake instead of proof of work. So there's a lot less computing power that's needed for that whole shebang. And that's really going to hurt like computer sales. So I wouldn't be in a hurry to get in that market. That's my thought. What about you guys? You buying any semis?
Yeah, I have Intel. I've been kind of nibbling away at it here and there. I haven't bought for probably 2 or 3 weeks. And it's tough. Like I feel like I'm walking on such a tightrope with it. I want to, on one hand, buy because it's obviously gotten very cheap just in the last month. I think it's down over 14%. And it's considerably lower than where my average cost per share is. So it's a good opportunity to average down. But at the same time, at least in the short term, I think it's going to continue heading down. So I'm like, okay, well, maybe I'll just wait to see if that plays out. Then, maybe consider adding more when I think it'll get cheaper. So.
Yeah, I've actually been buying Texas Instruments.
Nice.
I bought last Monday, one share at 156.82.
Russ, are you out of Intel or do you still have some?
Oh no, I still have them.
Some? Okay.
I have, I think, 129 shares, averaged at like $47.26. I think is what it is. So
yeah,
we have a really
similar. Yeah, we have a really similar average cost per share. I think mine's like 46 or 45, but it's up there, man.
Yeah,
it's up there, dude. And I remember I don't know how long it was ago at this point, but months ago now. First buying into Intel. I think even you and me maybe were talking about it around a similar time, thinking right at $50 a share, right under $50 per share. Oh man, this stock is looking so cheap. Yeah. But then it's down to like 25 a share, and it's like, oh my gosh, man.
Yeah, I don't remember who said it. I don't think it was Ray Dalio, but some big whale has a quote that, you buy something, and if it drops and the story hasn't changed, then you buy more. So I don't really think fundamentally they've changed, because like Pat Gelsinger, the CEO, dude, he just took over. It hasn't even been 2 years. Right. And for a chip cycle, from what I've read, to complete is, I think, 3 to 5 years from the get-go. So for his stuff to really start taking hold, I think we got another 1.5 to 2 years, and then we can really start judging him on the mess he came in to clean up. But yeah, I like it. He's aggressive, and I think he's got a vision for them. And but I think this quarter is going to be rough. During their last earnings call, they said Q2 and Q3 they're projecting to be the bottom. So I think it could. I don't know. I mean, I don't know if that's baked in or not, but this sucker could get down to $20 if people start selling off. So, I might buy a little more. Then we'll see. But yeah, you got the.
I don't think you're in Intel at all, huh?
Who, me?
Yeah.
No, but I was going to mention that they. I think they're going to have a factory in Columbus, Ohio, that they're building one.
Yeah.
You can correct me if I'm wrong, but I'm pretty sure they're starting to try to adapt to compete with Asia with microchips and stuff. So that's going to be interesting. What's going on, Matt?
It's a party now. Look at this.
Yeah, it's a real
Matt,
party.
what's up,
Darth sold you guys out. He straight up just sent me the link. So if you guys ever don't want to invite him back, you can use that as an excuse. Straight up sold you guys out.
We weren't really sure about this first one, but I don't know. That might have sealed the deal.
Yeah, I don't blame you. Intel win. Yeah, Intel's an interesting one. For me personally, I've always been a huge fan of Intel. I know they have a huge market share. The thing that bothers me is I feel like management has done quite a bit of a few missteps. And specifically, I don't know if it's a 6 nanometer, 7 nanometer, huge amount of delays over the past few years. So for me, it's definitely one I'm going to be watching. For me, I'd rather watch it kind of bottom and try to get back on that uptrend. But if you want to take a little bit of a risk, I think it's a good opportunity because it has been a solid company. So if the management can get underneath all the problems, I think it could be a good opportunity. But it could be like a GE at the same time. It could go and continue to be a falling knife. So for me, I'm going to be watching it cautiously over the next couple of years. And once it does kind of find this firm bottom and actually does start to move in the right direction, it might be an opportunity for me to buy in.
Yeah. What are your thoughts that you feel confident with Pat? Like, I love that he was the CTO and, oh my God, dude, I'm getting too old. The CEO before him, I can't think of the name. He was the CFO. So we had a CFO running the company, and I love it that, we have a former CTO, Chief Technical Officer, now that is at the head of Intel. So I don't know. I like Pat Gelsinger, and we'll see. I think he's a little overpaid. I know people ding him on how much he's paid. He's like one of the highest paid CEOs. So
I know a few people that are in the tech space that are very confident that the ship will be turned around. But for me, not being in that space, I've been involved in GE. I was able to get away from it. This is back in 2015. I was able to get out with, a slight squeak of profit. I was buying into we're going to be at a $2 EPS. I mean, this is before all the split and everything like that. And I was listening to Emil and, eating whatever he was spitting out. And, I was all about it. So it seems very similar. And so I was just like, you know what? If you only get 3 strikes, right? I mean, you can – I don't know who said it. It was Buffett or whatever, but you have the opportunity to swing when you want, right? And you don't have to take a swing at everything just because it looks like it's a good deal right now. Yeah,
you wait for your perfect pitch, man. No, I love it. Well, we'll just say Buffett said it. If it's on the internet, there we go. You heard it here.
Oh yeah, first. it was him. You've got your strike zone, and if something looks to be outside of your strike zone, you don't have to swing.
All right, let's see here. Let me go to see if I can get a question. What is this? Oh, he said. Ask the question your guest too. Oh, this was the euro the fractional shares for euros. Oh, I put this up already, right? Yeah. Sorry about that. Oh, look at this. I have to give a huge shout out to Caitlin. Dude, she's like the Death Star evaluation. We've had some email chats and just fantastic. She returned me on to Professor S.W.A.N, who you guys, just great. So when I'm sitting in traffic, I'm listening to Professor Demoter and going through just everything, and it's really good. So big shout out to Caitlin. Although she won't come on, she's all self-taught, and she's a very bright young woman. And we need more women in the investing space. What's up?
I've been going through, I read a ton of Seeking Alpha articles. I love starting my day with a cup of coffee, a little CNBC, a little Squawk Box. and some Seeking Alpha articles. And 9 times out of 10, Kaylin is in the comments of that article. She's everywhere.
Is she really? I didn't
Oh my
know
gosh,
that.
everywhere. Yeah.
I did not know that. That is hey, where are you at? And I don't know if you want to disclose your location
That's fine.
from the
Lake
remote
County.
base. Okay.
Yeah, Lake County, like Willoughby, Ohio. That's where I live right now.
What's your social security, Darth?
Uh,
Could you just type it in the
Mother's
chat?
maiden name.
Yeah.
Yeah.
Okay, so journeyman. Let's
Russ
see,
already sent me his, and Matt's typing it as
Yeah.
we speak. So I just need yours.
Street you grew up on as a kid.
Yeah.
I don't know
Pizza?
this one that Rex the Self REIT SELF.
I think it's some sort of self-storage company.
Oh, I know those guys. I've seen them. We work at a bunch of global self storage. 60. Oh, Jesus! It's a $62 million market cap. So that is pretty
Very
small.
small
5%
Micro.
dividend yield, and looks like they just raised their dividend in September after having not raised it for many years. I'd have to dig into that one later, but as of right now, they have a 0% 5-year CAGR. So I'm just going to say, as a dividend growth investor, I'm not really interested in that.
Yeah. Yeah.
Hey, real quick, can I? So we've
What do you want?
all 3 of us have shared our S.W.A.N.
Oh,
stocks
yeah.
for the evening.
Good idea.
We need to hear Matt's. Like, Matt, what's your one sleep well at night stock? The one
I was
stock you
just
can always
pulling out,
rely
I
on.
wonder if they've already talked about it or they
Yeah.
were bringing it
What's
up.
yours,
So,
man?
The one that immediately comes off the bat, I saw somebody chatting about it in the comment section already, or chat box rather. The first one that comes to mind for me is Pepsi. I'm a huge fan of it as a product, as well as just the fact that they have the snacks space as well. I think that's a huge moat that I think a lot of people don't recognize, right? So you have the Gatorades, Aquafina, you have Pepsi itself, you have Sierra Mist, but then you have Doritos, you have all the Lay's chips, you have a bunch of different things as well. And they just acquired SodaStream as well as Rockstar Energy within the past 2 or 3 years as well. And so I'm just very bullish on that overall. And I think that that's going to continue to do well unless we continue to have like the sugar water bans that we've seen, in some cities across. So that's number one. And I'll hand it back to you guys and I'll look through my portfolio and see which ones I'm also a huge fan of.
Well, I'd concur with you on Pepsi, and you're right, dude. 55% of their revenue in 2021 was from food, with obviously 45% because I can do that math. They taught me in my public school education. So yeah, not a lot of people do. They think they're a soda company. And in the last earnings conference call, Ramon LaGuardia said that non-sugar is king. And I did a small little video on it because to me, that was crazy that you have the CEO of PepsiCo saying non-sugar is king. So that's why I said these companies are living, breathing entities, and they're going to address consumer demands and the shifting demands. And this is what I think makes being an investor fun, because, these companies need to make a profit to survive. So they're going to do whatever they have to do, hopefully legally and above the law, to keep those profits rising. And also, were you drinking a Celsius on your live stream, Ryne?
Yeah, I was.
So yeah, and they took an 8% stake in Celsius recently. Did PepsiCo?
I was just thinking that up too. I'm like, yeah, that was a big acquisition. I mean, they acquire things like crazy.
Mm-hmm.
Good.
Yeah, that's the benefit of companies like these, like the Pepsis or the Coca-Colas or the Procter and Gambles, is they can just these brands that are popping up. Like Celsius has exploded in the last year. Yeah, really making great strides. They can acquire it just like that, no problem.
I'd say another one for me specifically that's done extremely well for me since 2015. We had a huge commodities downturn in 2014, 2015. So if you thought that the price of oil, went down, it went to like below $30 a barrel. Then you looked at iron ore, you looked at copper, you looked at all those other things. It was just a huge commodities perfect storm. So companies like Vail and BHP were really good pickups. One that I favored was more BHP. I work in oil and gas, so I'd worked with them, so I knew a little bit more about them. And so I felt more comfortable buying into BHP. And that one, when you can buy it in downturns, because it's going to be like oil and gas, where it's very cyclical. And it's a good opportunity. Natural resources are never going to go away. You're always going to need miners for nickel, copper, iron, all those things. And the problem with BHP, though, for some folks that are very strict dividend investors, is they don't have a consistent dividend program. It's an Australian/London company, and so they pay a semi-annual dividend. And I think that they try to pay out close to 40% of their income to shareholders. So if there is no income, you're not going to get a dividend. But at the same time, these past few years have been extremely great for the company. They've gotten their margins down, margins up rather, costs down expansively. So that being said, a lot of dividends have been issued. And if you were able to buy in around the same time that I did back in 2015, you'd be in the yield on cost and over 20%. I mean, I wouldn't be surprised if my yield on cost this year would be in the 25 to 30% range. So continues to just throw off cash, and may not be a typical Pepsi, raise it by a penny every year or so, but it's going to be one that if you're able to pick it up on a downswing, that'll be a good one to hold for the long term.
Yeah, I'm actually just looking at them right now, and 12.67% current yield. I won't throw it up on there. I won't throw it up, ma. BHP, Simply Safe, put them at a 40, unsafe, but that's just because they've had obviously a few cuts, or I don't know if that's from currency, or did they cut?
Might be currency.
Cut, right?
Iron ore is also down, so commodities are kind of coming down, right? So at one point, I think recently, two things. They were up at about like $75 to $80 a share, and they also just sold. Their petroleum business is merged with Woodside, which is another Australian company. So they are strictly like natural resource mining rather than say like in the fossil fuels and stuff of the like. And I think that has a little bit to do with their carbon footprint as well as just more focused in the mining industry. But like I said, it's going to be cyclical, right? It's going to be like investing in an oil company. Sometimes you're going to have a dividend cut, but in the long term, I think it's going to pay extremely well, unless we have this like decade of poor commodity prices. But if we do, BHP is one of the best miners in the world. It'd be like investing in Exxon in a downturn, right? They're probably going to make it through.
So how did you find them? You said you're in oil, and we've never really spoken. So is that because it's kind of your circle of competence, or you just
a little bit? Like I'd always just been interested in miners, and I think that knowing that they had in some of the fields that I work in Deepwater Gulf of Mexico, they have an ownership percentage in some of the fields that I work. And so I always thought of them as like an oil producer. And then I did a little bit more research when we were having kind of like 2015 was kind of like a sideways market. And it was horrible for oil and gas. And so I was just like, well, what companies do I know run really well in their petroleum side? And I was like, BHP. And I started doing a little bit more research, realizing that their petroleum business is like a fraction of what they actually did. And the majority of their money was coming from minerals and mining. And what I recognized was if you thought it was bad in 2014, 2015 for oil companies, it was even worse for mining companies at the time. So they had they were just in 2012 to 2014, they were throwing off massive amounts of cash flow, and they got penalized massively in 2015 for switching to this progressive dividend policy rather than like hey, we're going to pay $1 every quarter. We're going to raise it to $1.01 next quarter. They went to this 40% of profit basically or more to shareholders mentality. And at first I was like, this is BS. Like, why would anybody do that? And then I started thinking about it and I'm like, I'm more than like, if I was a business owner, I think it'd be prudent to kind of think about something like that, where it's like, hey, we're not making money this year. We're not going to go into debt. We're not going to go out to the market, issue $5 billion worth of bonds just so we could pay you a dividend. But at the same time, if we're making a crap ton of capital, we're going to give you guys money at the same time. So I thought it was, while they called it a progressive dividend policy, I don't know if they still call it that. I was like, that's really interesting. And to be very frank, it's paid off in spades. There's been three spinoffs, three spinoffs. They had South 32, which was, I forget what it was. It was like nickel,
Mm-hmm.
They spun off that into a separate company. That was really small. They had the Woodside one that happened in the past year. And then in 2018, they sold a lot of their onshore petroleum assets in like the Permian and stuff like that to BP. And so that was a huge dividend payout as well. So every time they have these spinoffs or mergers, they just continue to line my pockets. And it's like up 300% for me. And then also just the dividend that I bought, like with the price that I bought it, I was like $20 a share when I bought it. Coupled with all the shares that I've got, because I always reinvest all my dividends, like it's just a dividend monster.
So you said progressive dividend. Is that like variable dividend where they're paying that percentage of?
Yeah.
Because I have never actually heard of a progressive dividend, so I didn't know if that was like
either did
same
I
thing
really.
or...
Yeah, either did I until I really kind of like looked into them. And if you're kind of comfortable with it, knowing that like in some years it's going to be lower, some years it's going to be way higher. If you just go to like NASDAQ.com and look up BHP, it might not show up because they were two separate companies, depending on if you're on the London Stock Exchange or Australian Stock Exchange. But now it's all under BHP, under London. And I don't know where the data lies. So if it's still under BHP, you'll see that it goes up, it goes down, depending on the quarter. But yeah, it's variable. And it's not because of Forex or anything like that. It's just variable because the board will say, well, we want to buy back this much debt this quarter, but we still want to give 45% of whatever we made to shareholders. Or sometimes it's just the 40%. Sometimes it's like 70%. So really just variable in that respect.
Yeah, here in the United States, I think it's either Ruger or Smith and Wesson. One of those gun manufacturers has a variable dividend, and it's, I think it's prudent. I don't know what you guys feel, but I mean, I think companies have gotten into trouble, and it's been a detriment to the company trying to maintain that dividend when they haven't really been able to pay it. So I think variable dividends, it's not great for people that want that steady income, but I mean, we don't want to kill the goose that's laying the golden egg, right? So, I mean, if some years are tough, lean years, you're going to get a lean dividend, but it makes sense. Like, I don't know. I like that. I like it. So yeah, interesting. BHP Group. I've never really looked into them. So I love it, man.
And the last one, sorry, I just keep going on tangents.
No, bring it, man.
BlackRock. So BlackRock is a pretty obvious one. They control 9 to 10 million, depending on what month you actually looked at it and how horrible the market's doing that day. So yeah, $9 to $10 trillion worth of assets under management. When I started investing in them, they were like 3 trillion. This is like 2014, 2015, and huge dividend growth company. And the stock has done really well too. So I started picking up in like the low 200s, and I only have like 10 shares, so it's a pretty small position overall, but huge dividend, and I hope they split it so I could write some covered calls on it. But yeah, I wish now that I'm looking at it, I should probably buy some in the 500.
Let me break in real quick. Yeah, so Sturm Ruger, ticker RGR, they pay their policy is to distribute 40% of quarterly net income. So yeah, when they make a ton of money, you're going to get more, and when they're making less, you're going to get less. So I don't know. I think it's interesting. It's an interesting. Sorry, I was distracted by my thing I block every time. The chat-69.xyz, the best adult dating site. Who needs Tinder or Plenty of Fish or any of that? You got chat-69xyz. Come on.
I think it's hidden freedom in disguise. What do you think, Matt? Could be.
Might be you, Darth.
I think this is a pretty good. I think this is a pretty good point in the live stream to talk about today's video sponsor. Today's video is sponsored by chat69.xyz. And
yes. I did not see that coming. I was like, damn, you guys are sponsored?
For a 20% discount on your first month, link is in the description. You can also see the pinned comment. It's XYZ chat69.com/Russ. Once again, chat69.
Hell yeah, man. That affiliate link. I love it. We got to do it.
Man. You got to make 6 figures somehow.
Here. Keeps the lights on. All right, let me see if I got an interesting thing we got here. Some shenanigans and hijinks. Oh, here we go. This is a fun one. Anyone thinking about picking up some 3M? What level? I would in the 90s. I said it when they were in the 120s, and I said I probably, because the risk to reward for those shares is going to be, it's going to look a little bit better, but um, I'm actually considering tax loss harvesting my 3M shares and selling it, but then reassessing 31 days from then when I can buy the same thing back. So, what about you guys? Any 3M messing around with that?
Used to be a holder back in 2019, 2020, but I think I want to say I sold in late 2019, 2020 for a profit.
Any reason why?
I think I just was looking at balancing the portfolio, and it was a smaller position, and I think I wanted to get more into technology at the time, 2019, 2020 time frame, and that was around the same time when I was starting to become less dividend focused only and more long-term focused. Because at the time, just like a lot of you guys, I was getting like a couple $1,000s a year in dividends, but then it started getting like pretty substantial amount of dividends. And I was like, I don't need this much dividends. I was like, and I'm still going to be working for like the next 5 to 10 years. So that's when I focused a little bit more on growth.
Really? What about you, Darth? Any 3M for you in your future?
No, but I can tell you I see a lot of 3M products in the hospital working as a nurse. I also have a Littman stethoscope, which is probably one of the biggest stethoscope companies that 3M, is a part of. So I think they'll still be strong as a company. And again, I'm not giving financial advice, but there's so many products they have in the hospital, it's ridiculous. I mean, you see the logo everywhere. Tape. I mean, I use tape all the time. Like wound packing, wound machines. I mean, they got everything. Like chlorhexidine caps for like ports and stuff for IVs. I mean, they like telemetry strips. I mean, they got everything. Well, not telemetry strips, but telemetry stickers. So they have a lot of that stuff. So, I mean, there's a high demand for those guys. And the 3M mask, which I'm recovering from COVID still, still having trouble breathing on and off. But yeah, that's, I mean, they still have the 3M mask. I mean, that's, the go-to thing in the hospital as well. And their goggles. So, COVID's still around. So it's still a problem. So I still see those guys doing well.
What's funny is I'm in a completely different field than you. I work in every day. I'm in industrial warehouses, so forklifts, semi trucks, like that's my jam. And guess what? I see the 3M logo everywhere. So how funny is that? We got warehouses and hospitals, and the 3M logo is inside of each of them. Yeah, just today I saw on the ground. It looked like a long pen. It was some kind of surface test pen for I don't know what. I actually picked it up and saved it. So because I need to do research on it, but I saw the 3M logo. I was like, what the hell is that? I don't even know what this is. And I own the company that made this thing. So more on that to come. There'll be a special video series on this 3M pen I found on the ground and what it does. Oh my God. So anyway, yeah, that's what about you, Ryne?
So I'm just now looking at my position. I've got just under 12 shares of 3M. It's not a big position. I'm down like 35%. And I think overall, Russ, I'm kind of in the same boat as you, man. If it dips below $100 per share, I might start adding a bit more to it. Slowly but surely, this is my first time really going through this heavy of a litigation, or I guess a couple of them, since I started investing. So I don't want to do anything too drastic. I think it will persevere. I don't know exactly when it, will make it through all this. It probably will be a matter of years, but I think they'll hold strong for similar reasons you guys mentioned. I mean, their products are just everywhere, and they're in so many different industries. I mean, as you guys were talking, I was just looking around my office, and I've got these Post-it strips, these pink ones. I just dropped it, but I've got tons of Scotch tape everywhere. And I just moved here to Las Vegas, and in my move, I spent a considerable amount on packing tape and command strips, and just like you guys were saying, just other 3M products that are just seem to be everywhere. So I'm going to hold on to 3M at least, and if they get even cheaper than they are now, which is crazy, they have a 5.5% yield, but if they keep getting cheaper, then, why not throw a couple more dollars at it?
Yeah, I'm down 36%. I just looked on them. So, hey, what is it? PPC Ian, what did he say about them? The more products, the more chances for lawsuits. So,
Yeah.
but God, I remember when he was buying 3M at like, I don't know, $220 a share or something. So, good company, but man, that litigation is, that's no joke. It's no joke. There we go. What do you guys think of CVS? I haven't really looked at them lately.
Yeah, me neither.
I know they're solid company.
I have a maybe far-fetched look, but I feel like direct-to-consumer mail pharmacies might really put a damper on CVS and Walgreens. I live in Houston. I've already seen quite a few CVSs and Walgreens closing up shop. And
Really?
yeah, I think that's really telling for the potential future. And that also spills over into a little bit of the triple net lease real estate investment trusts that some folks might be very bullish on in the long term. So I don't think in the short to medium term it'll be a problem, but if it's starting to shutter their doors now and direct-to-consumer pharmacies have really just kind of come into their infancy, I don't know how that's going to work long term and prescriptions and all that crap, but I wouldn't be surprised if that has a huge hamper on their growth long term.
Yes, I just took a peek here and I will show it. Yeah, it's interesting. I was looking at their sales growth right here, that it's actually up. Look at that 2020, 5%, 9%, 11% sales growth, and their sales have been up and to the right. So as of now, but yeah, I could totally see what you're saying. And the shares outstanding, they diluted just a little bit. So yeah, I don't know, man. CVS, by the way, I didn't put on. They get a 90 safety score, so they should be pretty good. Let's see if we can find a couple more interesting ones before we get on out of here.
I think Walgreens has a better dividend growth than CVS. And I'm actually going to be buying Walgreens tomorrow. I think with hospital-wise and healthcare-wise, they're really focused on like beauty products too. And with Walgreens, sure CVS is too, you have the Minute Clinics now. So instead of going to your doctor's office, you just go to the Minute Clinic. So think about this. Like what I'm going to post tomorrow with my video with Walgreens, it's kind of like a trifecta. Okay, so you go to your, they're going to make money. They can possibly make money three ways when somebody walks in. One, you're sick. You go to the Minute Clinic for a physician, so they're making money right there, insurance. Two, they write a prescription for antibiotics. They're making money right there from the pharmacy side. And three, if you're sick, sometimes people just buy like soup or Gatorade or something over there, or Vicks or something. So that's three ways that they can make money there. So also in the hospital, what they're doing now, oh geez, chat 69's back.
Yeah, I blocked it again.
But they prescribe medications. So if you go to CVS or Walgreens, you're going to be picking up your medications right there in like 5 seconds, right when you're discharged from the hospital. I think adaptability, these guys have adapted pretty well, and I think they're generating some pretty good revenue. I think Walgreens revenue has increased over time. They're international, and Walgreens looks pretty strong right now, and they're a little bit cheaper right now, so I'm loading up on those guys.
Are they still planning on selling off? Are they still planning on selling off Boots? Is that still on the market?
I really haven't looked into that much yet, but I'm just gonna buy them right now and then make a call later. But they're doing just so well, like internationally, and actually in the United States, they're doing pretty well. And just from what I see in the healthcare standpoint, I mean, they have vaccines there. Don't forget vaccines. You go to CVS, you get the COVID vaccine, or if you're sick, you pick up Paxlovid. I mean, they're making a profit there also from that. So it's and Paxlovid's the medication that when people are sick, that with COVID, it's kind of like an antiviral, like Tamiflu, when people have influenza. So I don't know what you guys think, but my honest opinion, I think they'll be strong in the long run. They adapt pretty well as a company.
Yeah, that'll be to be seen.
So I want to elaborate on the closures. I did. I just looked it up. So maybe I spoke too soon. So just looking at it, apparently it was a strategic shift and taken in November of 2021. So it's 300 stores a year for the next 3 years, so 2022, 2023, 2024. And that's just to ensure that they have the right sort of stores and footprints for the right populations. And so I think what we're used to maybe is these large CVSs that are kind of like corner stores, right? That, have a pretty big footprint. And so maybe what they're thinking about is shrinking some of those maybe lower margin stores where they might not necessarily fit strategically in. And it kind of makes sense. Like the store that I had near, that's literally like 3-4 blocks away that just shut down 2 weeks ago, was a huge store. Maybe you don't need that. Maybe you just needed a corner store that sold higher margin items. And so maybe that's what they're going after, because I live right near downtown, and maybe that's their thought process, is to get rid of the big parking lots and everything the like and go smaller footprint.
Wow. Well, I will say that we help support the CVS that's right down the street from Mr. Williams. There's a CVS across the street from the Bellagio, and when we were there for Thanksgiving 2020, we needed some drinks. So it was very convenient to cut across the street and then watch the old fountains at the Bellagio. So,
you know what, Russ? I was actually in there. I was actually in there the other day. And one of the ladies working behind the counter actually asked me about you. She said, "Hey, have you talked to Russ lately? We haven't seen him for a while."
I
said, "Yeah,
so.
I'm actually going to be hopping on a stream with him, this weekend." She said, "Oh, well, tell him he owes us a visit soon." So you've been requested to come back to Vegas. So
give her the link. She can come on too.
Right.
All right. I was reading through some of these. Caitlin, real quick. I mentioned Pepsi, but if anyone's wondering, and this could tie into Matt, I said their free cash flow payout ratio is about 95%, so it's a little bit worrisome, and it was in the 81 prior. But she said it's artificially depressed by almost $2 billion by a build in working capital in Q1, which is still unwinding, and they need to finish writing down their lost Russia-Ukraine assets. So that's interesting. She thinks it's going to be okay because they have $5.7 billion cash on hand to bridge any dividend payments. And that's what these big companies do, right? They have so much cash that when they run into trouble, they can just dip into that until things turn back to normal. And then I had a question for Darth here that I was interesting because this came up on my stream. There we go. Oh wait, God bless.
It basically asked Darth
there we go.
if you still own MPW.
Why can't I find it?
Yes, I still own them. I'm just going to see what happens. But again, skilled nursing and everything, they should be okay. I mean, I see things, people are starting to go back to skilled rehab facilities. Now it's like hard to get people in skilled rehab facilities because the demand's so high right now. So we'll see. I know that there was some rumors and stuff, and they stopped those rumors from going out there. So it's just going to be interesting. I mean, real estate sector, those guys took a huge hit during the pandemic because people were scared to death to go to a nursing home because they could get COVID. So that was a big problem, and just everything at once happening with a lot of these skilled rehab facilities and medical REITs like NHI, LTC. I mean, LTC has not increased their dividend in a long time. It's just going to be very interesting. And there's a higher demand for skilled rehab now. People are getting sicker. People, diabetes, hypertension, rise in strokes. It's going to be interesting, but I'm going to hold on to those guys and see what happens.
So this is what they had a tenant that just filed for bankruptcy.
Yeah, I saw that.
They made Oh, sorry, Russ. My bad, man. Go ahead.
No, here we go. Let me make it bigger for everyone. This is on Seeking Alpha. And Bear Cave, it's interesting. I don't know if you guys subscribe to Bear Cave. He sends out emails. It's pretty interesting. It's all short stuff. But it was Pipeline Health. So Pipeline Health filed for Chapter 11 this last Monday, and MPW on their Q2 2021 earning call said they saw very limited downside to its investments in Pipeline Health because they had been operating very, very profitably. So I think that's kind of what a lot of the, like IIPR, they just had some of their, Kings, I can't remember it, King something. yeah, and then everybody starts dumping because. So yeah, it'll be interesting, but that's kind of cool. So you're holding them. You're sticking strong
Yeah.
with the MPW.
MPW is pretty big too. So, I mean, there's a lot of companies that they're a landlord too. So,
So you
pretty,
think this is a good buying opportunity then, potentially?
I'm just going to buy because there's a dip and see what happens, honestly. So, I'm not too worried, honestly. Could blow up in
Yeah.
my face, but I'm not too worried.
So year to date, let me put in total return. They're down 54% year to
Wow.
date with dividends. So yeah, that's pretty stout, man. That
The
could be
buyer's market for REITs. I mean, that's why I've been loading up on REITs in the financial sector, like Huntington Bank shares. Allies down, so I'm starting to buy them. HTBK, which is a bank stock, I've been loading up on. Who else is down that I've been buying? EPR Properties, I've been buying. I've been buying a little bit more O. Store Capital, I got rid of them, sold them, and I'm buying N REIT right now. Um, and yeah, for REITs right now, it's a gold mine.
Man, NNN, don't they have like 30 something years of dividend growth? Like they've been growing it for quite some time.
Yeah,
Let's see. I'll tell you. Yeah, Caitlin put a
Yeah.
comment about your hold on, let me get it. 34 years or 32-year growth streak, 34 years uninterrupted.
From what I
Here.
remember about MPW too, like kind of to your point, Darth, from what I remember looking at their financials, their top line is growing pretty substantially, as well as their funds from operation, the bottom line. That's growing pretty well as well, despite some of the headwinds they're facing.
Nice. So yeah, Caitlin answered your question about Boots. They couldn't find a buyer because the debt
Yeah.
market seized up,
Right.
and Apollo was almost there. So I think Apollo, correct me if I'm wrong, weren't they the ones that bought off of Verizon? Didn't they buy Yahoo and AOL? I think, right? I'm pretty
I'm
sure
not
that
sure.
that Apollo's the one that bought that. Which the AOL, I don't even know what AOL does anymore. Like, why are they still? Maybe they just want the "you got mail." It's an office joke or something they can all goof around with. But I don't know if this one's a joke, but or not. If it isn't broke expat John buying some Zim, that's interesting. If that's a swing or not, swing trade. Because I remember they were up there. They had that fat, like, what did they do? A special dividend or something. I remember there was a hot minute where everybody was talking about Zim, but I know they are. That's the
pretty bad.
integrated shipper.
Yeah.
Oh,
Pretty bad.
their dividend yield is currently 112.92%. By the way, so. Yeah, they're paying $27.10 a share, and their price is $24. So I'm gonna guess that's not sustainable,
It's
and
up
it's
and
from all
down.
the yeah.
Profit sharing. I mean, their profits that they share go back to investors, so that's why it
Oh,
looks like crazy and stuff.
yeah, I haven't really tore into them, but yeah. All right, let me see if there's one more thing, and then there you go. One more question for Darth, I guess, from Harsha. They said for you, O is down quite a bit, where ADC is up. I know you're big on ADC. You got them on my radar. Though they're
Mhm.
similar businesses. Any reason why? I heard of ADC from you, like me too. Bought it and several months ago, and it has done well for me. So, any reason why that Realty Income is down and ADC is up?
Makes no sense. ADC is way smaller than Realty Income. I would consider them a rival to Realty Income. Actually, their dividend growth rate is better. Man, I was telling you about these guys. ADC is a monthly dividend real estate investment trust. So these guys, basically in 2021, the board of directors said we're going to be a monthly dividend stock, and that put those guys on the map. And it really doesn't make any sense that they're more than Realty Income. They're smaller, way smaller portfolio wise than Realty Income. It doesn't make any sense.
Yeah, they are. I was just trying to plug it into the just to see the return difference here. And it is, I guess I could share it. It's not that different here. I'll share it. This could probably wrap up with this, but I'll show it to all y'all fine folks out here. I'm so slow on the sharing the screen. I like old, not old grandpa here. I'm not that old, everybody. Here, let me do total return. So with total return, yeah, Realty Income's down 8% and ADC's down 1.1.5%. So, I mean, it's enough, but I mean, you could see on the chart they're still kind of taking the same path, I guess, the same glide path. But anyway, all right, I'm old. I am the oldest one here out of all you guys. I know that. I think. I'm pretty sure. Yeah,
I'm
I am.
I'm not too far. I'm not too far behind you, Russ.
I'm 37, so I hear you.
40. I'll be 45 in April. So,
No,
all
I
right.
just turned 29.
Dude, I wish I could have went down and or went to what is this? Sorry, I'm talking to you guys and I'm reading comments and scrolling and yeah, the Dividend All-Star team. Yeah, they're gonna get shirts and song made up and here we go. All right. Yeah, Apollo bought Verizon Media, which was immediately rebranded to Yahoo. Okay. AOL. Did you guys ever use AOL? Ryne, was that even a thing when you were younger?
Heck yeah, man.
Yeah, it was. Yeah.
Oh, yeah.
You're not that like I'm talking to a kid here. No, I mean, yeah, duh.
I used to have AOL. And I used to use AOL and play EverQuest.
Oh,
I
nice.
never played that. When was EverQuest?
It was like a precursor to like the Elder Scrolls games. It was very similar. I don't even know if you know what those are, Russ, but Morrowind, Skyrim, Oblivion, I think was one of them. It was kind of very similar to that, but just kind of it was an online version of it.
The only one I played was Myth, and you probably don't remember Myth. That was yeah, that was a late '90s game. Okay, let me see here. Then maybe that's it. I could just do this all night, but all right, here, last one. We'll give it for Darth here from Harsha. Do a special spooky intro music for Halloween Day, please.
I think my intro's spooky enough. Maybe.
Darth's a high flyer, man.
I don't really go that far.
Dun, 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 dun.
All right, here we go. All right, guys. I don't know. We'll probably end there. You guys have anything you want to say? You want to bring up anything? I mean, I don't.
No, just
No.
appreciate you guys
No.
putting up with me on short notice.
Dude,
That's
come
right.
on. You
No,
just
man, glad you
educated us
joined.
about BHP. I mean, my
No,
God.
it's cool having you hop on. I just want to say thank you to everyone who hung out with us for this last hour. It was fun doing this. I'm glad we all got to finally do this. For those of you who don't know out there in the audience, we've been trying to plan something like this for months now, and it just now finally came together, thankfully.
Yeah.
So thank you everyone for tuning in, and the rest of you fellas here. I hope we can do this again sometime soon.
Yeah,
This is fun.
this is a lot of fun. Definitely.
Hey, they're back. I was starting to get tired of.
And one last word from our sponsor.
I was gonna do like this, like the Brady Bunch. Okay, now that'll really age myself watching the Brady Bunch.
There is a story
Yeah, they
of
did
a
a
man named
remake of.
Brady.
They did a remake of that, right? They need to do a punk version. I just saw Me First in the Gimme Gimmes, and they don't do that yet. So
So I think
Alrighty.
I think
Yeah.
on the note of punk rock, last thing, I think Tom DeLonge's back in Blink-182 for anyone who cares. I think.
he is, and do you know how I know this? Because when I went on YouTube last, the algorithm somehow selected for me Blink 182 reacting to teens reacting to Blink 182.
Oh, I've
So
seen
if that isn't a mind F of a, and of course I clicked because I was like, well, that's clever, I gotta see that. But yeah, anyway, I've never seen them, and I do remember them. So, all right, everybody, we'll get out of here, and I do appreciate Ryne Williams, Matt Money,
Thank you.
Surprise stopping by, and
Pleasure.
Darth Dividend. So
It's a pleasure with you
Yeah.
guys on here. That was awesome.
You guys,
Yeah,
are-
let's do it again. Let's do it again sometime soon.
Yeah, definitely.
I'll come over to one of your guys' houses next time. Your
Yeah,
channels.
we can
Very
all.
good.
Let's do it all in Vegas.
We'll have to do it with Hidden Freedom when he comes back too. We'll have to get on with him.
hot Dave.
Mountain Man.
Well,
No.
we'll have to do Ryan's because I use the free, cheapy, frugal version of StreamYard, and I think I can get up to 6 people on at the same time. So,
There you go.
yeah. All right, I'm gonna
we
end
can
this.
do it on
I'm
mine.
gonna end this.
All right, guys. Thank